We need to start thinking outside the box. But you can't sit down inside this country, Madam Speaker, and have billions of dollars, billions. If anyone take a quick Google right now and look at how much U.S. debt treasury or U.S. treasuries that is held by the Cayman Islands entities, it is over $200-something billion. And what are we talking about, Madam Speaker? A loan portfolio, residential loan portfolio of just over $2 billion. The money is here. Let us see what it is we can do. If we can't get cooperation from the Class A, let us look at the Class B. Some Class B can only lend to their employees. Maybe it's time now for us to take a look at it. As I said here earlier, I looked at SEMA's report for the entire banking sector in the Cayman Islands, both Class A and Class B. Does anybody have any idea what is the total profitability for the entire banking sector as reported by SEMA for 2021? I'll tell you, Madam Speaker, it's $3.5 billion US dollars. Now, of that amount, 228 million US belongs to the Class A retail banks, and the remaining 3.2, 3.3 billion is all the different Class B banks that are sitting here. Madam Speaker, the Cayman Islands financial sector was built on banking. Maybe this time now, if we can't get any cooperation from the Class A space, let us go and look at what we can get done in the Class B space. Last weekend, Madam Speaker, I was in Florida visiting my cousin, starting my back to school shopping early and everything else. We talk about 10 interest rate increases on the Fed rate. Do you know how much my cousin's mortgage went up by? What percentage? 0.
It will be appropriate to cut rates at such time as inflation is coming down really significantly. And again, we're talking about a couple years out. I think, as anyone can see, not a single person on the committee wrote down a rate cut this year, nor do I think it is at all likely to be appropriate. If you think about it, inflation has not really moved down. It is not so far reacted much to our existing rate hikes, and so we're going to have to keep at it. The committee is completely unified in the need to get inflation down to 2%, and will do whatever it takes to get it down to 2% over time.
Our friends that went to school in college, one of them in Atlanta owned around 5 homes. You know how much his mortgage rate went up by? 0. Their mortgages aren't tied to the Fed rate. Their mortgages are tied to the bond market. Even right now, in the United States today, the average rate for a mortgage is around 6.7%. It's a mortgage rate on a 30-year fix, 6.7%. We need to have solutions for our people. And the truth of the fact, as I mentioned before, having over $2 billion of loans subject to a variable rate that every time the Fed moves, we move in a consumption-based society, it is pure, unadulterated madness. This can't continue like this. The system was never designed for this. One of the first things I would encourage the government to do at this point is reach out to the Caribbean Development Bank, secure the line of credit, and start with our seniors or more vulnerable people whose loan to value is actually quite low. They have a lot of equity built in their house. Their credit risk is actually quite low. And let us see if we can cut their mortgage interest payments down from 10 point whatever percent it is that they probably be paying to maybe 5 or 6%. And it still will not be a problem for us. The letter is there. We did the legwork. We just need a matter now of getting that done. Start with reaching back out to the Caribbean Development Bank for the $100 million line of credit. I think was at 4.75%. If we can even lend that out at 5.5%, it is still way less than what a lot of people are paying. And I would say earmark that money for people above the age of 55 or 60, depends on how much room we can have. Their loan to value is quite low. They've built up a lot of equity inside their property. So the risk at this point is very limited. You're talking about $500,000-$600,000 real estate property where the balance is only $200,000. So the risk to the development bank at that point, Madam Speaker, is actually very little. And if they default, I guarantee you in this environment, you'll have no problem selling a $600,000 house for $200,000. People, Caymanians will buy that up like tomorrow. So that gonna be a risk issue for the bank. So that's the first thing. The second thing, Madam Speaker, is a matter of reaching out to the Class B banks and seeing what it is that we can do to get some kind of assistance from them, because they do have liquidity. Madam Speaker, the amount of money inside this country is mind-boggling. It's here. Let us see what it is that we can do. And some of these banks, some of them are from even other different countries that have certain programs in place that the government give them. As a tax write-off, if you do this low income or low data or whatever, they actually get tax benefits for it. These are some solutions that you can do, Madam Speaker. And then lastly, which will take a little more time, start looking at getting the capital markets. Stop thinking the banks are going to be a savior, because what we're asking the banks to do, it is too much risk for them. We inherited a Cayman that was good and a Cayman that was strong. But in the end, colleagues, we're not going to be remembered for what we inherited. We're going to be remembered for what we leave behind. And I'm going to tell you right now, it's time for action. It's time for us to start moving. Thank you very much.